What's up guys, welcome back to InvestingPH. Now this month gave us a little bit of hope when the market hit the 6,800 level. This was driven by a lot of factors such as Q2 earnings and the release of the second quarter GDP at 7.4%, which showed the Philippines continuing to withstand the global turmoil. But as always, it came back down again below 6,600. Still better than the previous months. The negative sentiment was also driven by a lot of factors. One such is the weakening of the peso against the dollar, which is now at 56.15 pesos per 1 USD at the creation of this video. Now this isn't good for our economy as a weak peso would lead to higher prices of goods and overall inflation. And this affects our companies as well, like materials for their production getting higher, labor, and companies with dollar debts getting more expensive to pay off. Now, although the price of our market is still trading sideways and is going down sometimes, the total earnings of the PSEI companies are climbing up and have now surpassed their pre-pandemic earnings, hitting a high of 960.2 billion pesos compared to its high of 855 billion pesos pre-pandemic. With that, our market has a P/E ratio of 13.9, which is lower compared to our 10-year average PE of 19.6. This means our market's price is relatively undervalued compared to the 10-year average PE of our market. And this is with the real estate companies still haven't yet recovered past their pre-pandemic earnings. So the big question here is, are we going to see our market going past again the 7,000 mark this year? Well, no one knows. All we can do is do our part as an investor and invest in great companies that are trading at a fair price. This is what I've been doing for the past years. Ignoring the noise and just invest consistently no matter what is happening in the market. Now let's head on to my portfolio. As of the end of August, my total invested money is 1,408,100 and my portfolio has a total return of 9.32% or 131,268 pesos. My returns were driven by DMC's stock price climbing, which has given me a gross return of 108.7%. This is with the dividends I got from them, wherein I reinvested back into my portfolio. My second largest contributor is Aboitiz Power with 26.75%, followed by Metrobank with 26.81% and Globe at 21.08%. Now in August, I only bought one stock which is a new addition to my portfolio, REIT. Its stock price has dropped significantly over the past months, and with its price right now, its dividend yield is sitting at 6.2%. Now, although REIT is new and we can't yet analyze its financials, since Megaworld is its parent company, which is a strong company with solid financials, I am confident enough to invest in its REIT. Next, I also sold all my shares in Cebu Pacific. Now, I know I said in the early months of this year that I am thinking about adding more shares to it, but I changed my mind since for the past 3 years, I haven't yet received any dividends from them. And right now, its debts are growing and growing. To top it all off, its earnings are still negative, which is a given since the airline companies is the one that is most affected because of all the lockdowns caused by the pandemic. But as I see it, it would take quite a long time for it to recover due to the amount of debt it has accumulated so far. So it was a good thing that I didn't add any shares to it ever since, and it's only less than 2% of my portfolio. So I decided to sell it since the fundamentals of the company have changed because of the pandemic, and I transferred the money to another cheap company in my portfolio. Though I suffered a big loss in my investment here, it's okay. It's a normal scenario to have some losing investment. You can't control and predict everything. What's important is the entirety of your portfolio's return. Anyway, these are all the stocks I own. LTG still takes up the largest percentage, followed up by Megaworld and Aboitiz Power. Now, if we take into account capital gains in these stocks, the story would be quite different. My largest would still be LTG with a market value of 182,000, followed up by DMC which has now grown to a market value of 165,000, and third is Aboitiz Power at 141,000, and DNL with 116,000 market value. Now, Megaworld has fallen to 5th place since its market value in my portfolio is only 112,000. Its stock price is still far away from its pre-pandemic value. Grouping my stocks by sector, holding companies still take up the largest share, followed up by real estate and banks with 17% and 16% share. Now with my continuous acquisition of REIT this August, REITs now take up 9% of my whole portfolio. Now let's head to a much deeper analysis. Right now, my entire portfolio has a PE ratio of 8.09, and based on the free cash flow of my investments, my portfolio is still 42.9% undervalued from its fair value. And if I look at the ROE of my entire investments, my portfolio's ROE is 14.2%, which is higher compared to the Asian market of 9.4%. Now, ROE tells me how efficiently the companies I hold are using shareholders' money to produce net profits. So the higher the ROE, the more efficient the companies I hold in using shareholders' money. And as for my portfolio's return on assets, which is at 5.6% compared to the market of 5.1%. Now, if you're curious as to how I got this valuation for my portfolio and the graph I showed a while ago, which features the top gainers and the top holdings based on market value, well, the answer is simply Wall Street's platform. This not only gives me a detailed analysis of my portfolio, but also gives me an update of the stocks on my watch list, whether it has released the recent quarterly or annual report, dividends, and even insider buying or selling. And it also computes a fair value for me, which I can add to my intrinsic value computation, giving me a guide to what analysts expect from these stocks. So sign up now to Simply Wall Street. They offer a forever free basic plan, and if you use my link below, you will get a 14-day free trial of all their platform's features, like what I've shown a while ago. And not only that, if you avail of their plan using my link, you get a 30% off. So grab this opportunity now to level up your investing journey. Anyways, back to the video. For my portfolio's dividends this month, only one company gave me dividends, and that is Ayala Corporation, adding 150 pesos worth of dividends. This now makes my 2022 dividends to 41,910 pesos, and the total dividends I received so far to 93,871 pesos. Now, although I got a small amount this month, what I am excited about is September, since a lot of companies will be giving out dividends. Metrobank, DDMPR, MREIT, MPI, Globe, and my largest holding, LTG. This will boost the total dividends I receive to more than 100,000, and this will put my monthly dividend income to 4,000 pesos. And this is already after taxes. I'm slowly feeling my passive income growing every year and slowly crawling my way to my goal of 10,000 pesos a month before I reach 30 years old. Hopefully, I would reach it. Now, the total dividend yield of my portfolio is 5.66%, which is equivalent to 87,000 pesos per year. This is before taxes. Now, I didn't get this amount this year because I didn't get the full dividends from some companies, since I added some money to it after their dividend announcement. So, assuming all the companies paid out the same rate for next year, this is the estimated dividend earnings I will be receiving. So the top 5 highest dividend yielding stocks in my portfolio are LTG, followed up by DMC, DDMPR, and the new addition to my portfolio MREIT and Metrobank. Now, as to how my portfolio is compared to the PSE index, the PSEI is still lagging, with a return of negative 18.11% from its point in July of 2019, while my portfolio has a 9.32% return. So not bad, my portfolio is doing fairly well compared to our index. Although I don't know if my portfolio can beat the index in a longer time horizon, but it's exciting to see if my strategy of mixing value investing and dividend investing will stand up to the index's return in the long run, wherein most mutual fund managers fail to beat. So would I be able to maintain my lead? Only time will tell. With that, this ends this update for this month. Although we are still far from recovery, it's a great sign a lot of companies have now passed their pre-pandemic earnings. So we should use this opportunity while the market is still trading sideways to buy the stocks that are still undervalued. To end this video, I'll share a quote from Warren Buffett. If you don't find a way to make money while you sleep, you will work until you die. This is also true, and this is what a lot of Filipinos fail to see. They think working hard every day is the only key to being successful in life. But there are other ways for you to gain money without you doing the physical labor. And this is where investing comes in, making your money work for you, using compounding interest to your advantage. But you have to understand that this takes time for it to work. So start early as possible. No matter how small your income is, It doesn't matter. You have to let compounding interest do its magic for you at an early period, so that one day you will reap the benefits of it. Now, if you want to learn more about other vehicles you can use to grow your money here in the Philippines, I made a video on dividend investing using Pag-ibig MP2 versus dividend stock investing. And if you want to use dividend investing strategy in stocks, I also suggest you watch my video on the key to successful dividend investing. With that, if you still haven't yet liked the video and subscribed to my channel, then do so before leaving. It would really help out my channel to reach more Filipinos and maybe help out in increasing the investors here in our country. So thank you and see you in the next video.